Morning, everyone. As you come in, we apologize for the late start. We were having a few technical glitches, but welcome to Cook County Small Business Source monthly Wednesday webinar series. I'm going to let you all come in, and then we'll get started in about a few seconds since we're running late. My name is Dominique Gamble. I am the Senior Program Manager of the Source Program here at Cook County. I have with me from Cook County my colleagues Mercedes McClure and Valeria, who will be assisting when we have time for question and answers in the chat. So if you have any questions, just a little housekeeping, please drop all your questions into the chat for us, and we will have a time at the end of the presentations where we will go through those and read them aloud, and the speakers will be able to answer in real time for you. We also have Maricela Zambrano from Southland Development Authority, who is also presenting, as well as Mr. Stanley Jackson. Mr. Jackson, I'm sorry, what is the name of your company?
I am with Jackson Melton, small business law firm based here in Chicago in the south suburbs.
Which we all know we need a lot of small business legal advice. A lot of questions coming in for that. So I'm looking forward to hearing what you're going to share with us today. And let's get started. So again, welcome to the Cook County Small Business Source. As you can see here in a lovely picture, I have Ms. Maricela and myself. She's a partner of the Source through the Southland Development Corporation. And I'm just going to give you a quick, brief overview of the Source and what it is that we do here. So the Cook County Small Business Source was set up during COVID. Initially, we were set up to help small businesses to survive during COVID when the world realized we needed small businesses to continue to grow and keep our economy going. So as we say here in our tagline, the Source was here to help small businesses strive. We wanted to help you all grow and elevate your small businesses. We provide no cost business advising, resources. We have a partner network who does and hosts free events for us and trainings, webinars like this. And we also provide access to capital opportunities for our small business owners. So the way that we do this, let me see. So the way that we do that is through our partner model, as you can see here. As when I stated, the Southland Development Association, we have 11 partner organizations that are located throughout Cook County who assist us in providing these services for our small businesses. They will schedule free one-on-one business advising services with you all, help you all create a plan for your business, see where you are locally or where you are located in your business and how to help you get to the area in which you would like to be. We do understand a lot of small businesses come in and you won't access the capital. We won't access the capital. We need money. But we are here to kind of help you take a step back because a lot of small businesses, especially during COVID, got started and you were in a hustle. You were trying to keep money going. And now your business has grown and is flourishing. And now we're trying to help take you to the next level. So now we got to just take some steps back and help you all figure out, how to build that business plan, how to get your budget together, how can you get a small business loan or be even ready to be grant ready. So that's what our small business partners are here for. And as you can see at the top, we have a few. I'm not going to name all their names. We have WBDC, Allies. I've named the SBA Southland Development, Berwyn, Chicago Minority Supplier. And then we also have 40 plus referral partners who are also located throughout the South suburban lands of Cook County to assist us with getting the word out and directing you all to the source for these resources that we're offering. As some of you all, I'm not sure, may know, some may not, we just closed a small business source grant back in February of 2024, where we awarded $50 million to 3,000 businesses. The grant budget was initially $40 million. President Pretwinkle increased that by $10 million midway through. We saw that we still had more businesses that had needs, so we added an extra 10 so we can help a little bit more businesses. All of the awards were awarded to small businesses that had 20 or less employees, which is typically the businesses that we work with. They typically have 10 or fewer employees, but we saw with the grant that they had 20 or fewer. And here's our demographics as well as our impact. These numbers have increased since we created this. This is from December 2023. We just did some new impact numbers. So some of these numbers, of course, are higher because the months have grown and we've been doing more work. So we have distributed 67 million in grants since the creation of the program in 2020. We have assisted over 16,000 small businesses, and we have reached over 67,000 small businesses. So that reach is through webinars, through events, through newsletters, e-blasts, all of that through the source as well as through our partner network. So we are here. We're here to assist. I know a lot of people are still saying they don't know that we're here. Please share the word and let people know that there are free resources available to them if you are a small business owner, and we are here to help take you to that next level. As you can see here, demographics, 77% of those small businesses are people of color. 62%, I think now we're at 68% of those businesses are women of color. I'm sorry, are businesses owned by women. Get my demographics mixed up, I apologize. And 94, I believe we're now at 96% of those businesses are micro businesses. And as you can see, 35% of our business owners identify as Black, 4% identify as Asian, 29%, I believe that number has also gone up, as Hispanic or Latino, 15% identify as other or non-white, 65% as two or more races, and 11% identified as white. So we are very diverse in our demographic of small business owners that we are assisting here. We are very excited that we are able to tap into small businesses throughout every area of Cook County, and we are looking forward to continue our work. I just put up a few little impact stories of some of the small business that we assisted. Pink Panini is actually one of Maricella's small businesses that she helped through the Southland Development. They also are a grant award winner, and she also just started a new business. Where's the business located? So people can go visit her.
Located in Hazel Crest. So both Pink
Hazel
Panini,
Crest.
yeah, and Crabs and Cocktails are owned by Latrice, and they're both located in Hazel Crest, right next door to each other.
Right next door to each other, and we were able to see Crabs and Cocktails, and it's really beautiful. Pink Panini's food is very good. She made us some noodles. They were very good, and her sandwiches. So I'm just giving out free plugs. And then we have Freedom Lee State of Mind. They came through the Berwyn Development Corporation. If you all are not familiar with the Berwyn shops, they're open right now. Please do go give them a visit. They're wonderful. It's a cohort of small businesses that they do from the summer months to December, where small businesses get the opportunity to have a like she shed location on the weekends. They can work through that, see if they're ready to go into a brick and mortar, and then they would assist them in getting into a brick and mortar after December. So it's a really good opportunity. Miss PSG Free is from CMSDC. She was once a Cook County, I believe, sheriff, and then she retired and she wanted to make her own granola, and she is killing the game. So we are here helping all type of businesses. As you can see, I just wanted to show you all our picture. People were saying they got a grant, we made an impact. We're happy here at the source, and we are excited and hoping that we can assist you all next. So here's how you could join us. If you're interested, you can go to our website, which I have here, Cook County smallbiz.org. You can use the scan code. It will take you directly to our sign up page, or you could sign up here for our newsletter, and that would just get you in a stream of being able to keep up with our events, our e-blasts, let you know if we have grants or resources coming out. All right, and that is all for me. I thank you all for listening. Again, thank you for joining, and I'm going to pass it off to Ms. Maricela. Thank you all.
Awesome. Thank you, Dominique, for sharing that valuable information. And I hope you guys can see my screen.
Yeah.
Awesome. Before we get started, I would like to take the opportunity to extend our gratitude on behalf of the Southland Development Authority to the Cook County Small Business Source Program. We appreciate the opportunity and the privilege to serve small businesses throughout the Cook County area. So thank you so very much for that. As Dominique mentioned, my name is Maricela Zambrano, and I'm a relationship manager with the Southland Development Authority. I'm super excited to be here with one of our expert consultants, Mr. Stanley Jackson from Jackson Melton LLC. to share with you our Business Financial Fundamentals webinar, which is part of our Think Like a CFO series. So today we will be going over a variety of topics that you see on the screen. And at the end, we will have some time for questions and answers. So if you do have questions throughout the presentation, please feel free to add those to the chat box. Before we begin, I would like to also introduce to those of you who are not familiar with the Southland Development Authority, give you an intro on who we are and what we do. So the Southland Development Authority, also known as the SDA, is a non-for-profit business organization. So we were launched in 2019, so right before the pandemic, by business, civic, and political leaders across the Southland. And the mission is to drive and grow the economy of the South suburbs and to do so inclusively. So how do we do this? We do have an arm, which is known as a Business Growth Service Unit, and I'm part of that. So we're known as the BGS. So as relationship managers, we are responsible for providing business advising to businesses within our area. We're also responsible for developing and executing special programs, connecting our business owners with one-on-one tailored expert consulting, also community partnerships, and developing business education and cohort courses. So we're super excited to announce that we are having a BFF cohort. It's a 6-week cohort, and it's designed to go over business financial fundamentals. This is also part of our Think Like a CFO series. So the goal here is really to continue to encourage business owners to continue to think like CFOs and to continue making those informed business decisions. So we're going to cover a lot of information such as cash flow management, budgeting and forecasting, risk management, just to name a few. It is designed to go on for 6 weeks. So we will be having orientation on July 17th, which is a Wednesday. Orientation will be both delivered in English and in Spanish. Our English session will go from 8 a.m. to 8:45. And our Spanish session will be from 9 to 9:45. So if you're interested in attending, it is completely free to attend the orientation. Please scan the QR code on the screen and register to attend. If I move on from this slide, please don't hesitate. If you don't have a chance or opportunity to scan the QR code and register, we will definitely share the deck with you and also contain the link for registration so you can register. So everyone that's here today, I strongly recommend that you attend our orientation so that you become BFFs with your finances. And I strongly encourage you to please bring out your phone and scan the QR code on the screen. I'll introduce to you our business needs survey. So as I mentioned, we are responsible as relationship managers and business advisors to meet the needs of the community. So in addition to providing like the business advising sessions on a one-on-one basis, we also develop the programs internally. So what better way to develop our programs than to ask like our sources directly instead of guessing on what programs are needed. So we ask that you please scan the QR code on the screen and take our survey so that we can capture the information that you want us to create. So this will allow us to understand where you are in your business, where you want to go, and what resources are needed. So it could be anything from like business plan development to growth strategies, operations, whether you like it more in-person or webinar-based events. So I strongly recommend that you complete our survey, please, so that we can make sure that we meet the demand and your needs. And again, I'll share this QR code with you as well after the presentation. And now what we're all here for, Mr. Stanley Jackson. It's a pleasure to work with Stanley. He's one of our expert consultants. Stanley is a founder and managing partner in Melton LLC. So he's like a one-stop shop. He knows so much information on valuation, merger and acquisition, and tax counsel. Mr. Jackson and I've had the pleasure of working with businesses within our areas on a one-on-one basis and also on a group setting. So today, Mr. Jackson will lead our presentation. I'll hand it over to him.
Thank you, Mary Sulla, for the introduction. Just give me a thumbs up if you guys can still hear me. Perfect. A little bit about it's funny that I have been on the other side. I've been in Mary Sulla's shoes, and I also, after my first year of law school, was a fellow in President Preckwinkle's program that she had for graduate law school students, business school students at the time. So it's kind of like fun to see how my life has come a little full circle. with this presentation with with experiences I've had in the past. But yes, beginning of the year, I started Jackson Melton, went out on my own and put my own shingle out. And I am very passionate about helping business owners reach their goals and their objectives and create wealth for their families and their communities. And our presentation today is going to basically give small business owners a smaller diet-sized version of what any business is doing, no matter what size they are. Yes, I've been fortunate to work with large companies and small companies, but at the end of the day, all businesses have pretty much the same goal, trying to make or create wealth for their owners or their investors and to make a difference in their communities when they choose to do so. So I'm going to move on to sharing my screen and start our presentation now. Let's see here. We're going to start this from the beginning. And I'm going to move past the introduction there. And can everyone see my screen okay? Okay, we'll start here with the business life cycle. Every business, no matter where they are in their life cycle or stage, can be marked on this graph. If it's no matter what size it is, you're either at launch, growth, shakeout, or you're a mature business that's looking to get re-energized to go further, or it's going to decline. And that's when Chicago's famous for a couple of companies that went into decline, like Montgomery Ward's. It did not compete with the other big box retailers that were emerging, it became a extinct business. So every business, no matter what size the business is, what industry it is, it participates in, what its clientele is like, can always find itself somewhere in the business life cycle. So this graph can always be referred to, and people can identify where they're at. So, for example, we're going to move on to my next one. So no matter what business you're in, there are 6 techniques that I'm going to introduce over this presentation that allows a business owner to take on the mentality of a CFO and surveil their own business from internal risk and reward factors and even external risk and reward factors. I'll go into greater detail as we go on. But one of those tools is competitive analysis. This constantly needs to be done. Either if you're starting a business or you're currently active in your business, you always need to be aware of the competitive environment in which you're operating in. Next to that is organizational design. You hear news stories about companies restructuring. They're going to change the organization, redesign the organization, and take advantage of something that they probably recognized as a weakness or a strength when they were doing the competitive analysis. And then once they create that organization, that new structure, they're going to have to finance it or find a way to understand how their capital inside their business is flowing and working and making sure it's being deployed in the most efficient way possible so it can garner the highest rate of return. And then when you take those investments and you implement them, you're going to have to make changes throughout your organization. You might have to have new personnel. You might have to have new suppliers. You might even have to have new professional service people in your business, such as consultants. And you might need to have changes to either your service delivery or your production delivery systems, depending if you're a service business or a manufacturing business, for example. And then when you make those changes in the organization, we're always going to be concerned about every decision and how it's either going to create value for the business or destroy value for the business. So valuation and understanding how much the business is worth based on those decisions that are being made by leaders is going to be impacted, because at the end of the day, the final thing is creating wealth, again, for your family and your community and your owners. So let's start off with the competitive analysis part. So CFOs, as I said, use these surveillance techniques to identify what I would say are benchmarks that they need to measure the firm's effectiveness and how they're executing on their particular strategy. Again, this could be a hamburger stand, this can be a lithium battery manufacturer, this could be a car manufacturer. Any business, these basic concepts can be applied. So competition and the risks that are out there in the marketplace always have to be identified so you can push forward the business and so it can maximize its value and what its intended purpose is for its owners. So that competitive analysis comes in a multitude of ways. You can do qualitative analysis. Qualitative analysis when you go out and you read, collect all the information that is, I say written, like what is the industry's opportunities? What are the trade associations are saying about a particular industry? What is, the investment community saying? So those are sources in which you can get that type of information. Quantitative information is also coming from those similar sources, but those are hard numbers where someone can say the hamburger market is going to grow X amount of percent over the next few years, and this is the research we've done that supports this. And if that is compelling to the business owner, they can say, this is something that's worth risking time, money, and energy to pursue. And then when you look at other forms of analytical information, we can talk about economic information, such as macro information. When we were opening up the call, we talked about how important the pandemic was and influencing what we're doing today, even because that was a global economic event that affected all businesses, no matter what industry they were in or what they were doing, because it affected everyone. So that's a macro level issue. Micro level issues are things that are more refined and specific to the business, such as a local rule or ordinance that might say you can or cannot do something that may be done elsewhere, but in the particular area that you're trying to penetrate or go after, it might not be an opportunity in which you can be successful in, but you need to identify all those things as part of that competitive analysis process. Next, after businesses go through that competitive process, a competitive analytical process, I would always turn to find ways to figure out what is my business positioned right from an organizational perspective. And I like to start with this current screen right now because it's one of my favorites. It's been around in my career since it started, to be honest with you, because almost every enterprise can be expressed through this basic circular function where every business has a marketing function and a PR function that is able to like communicate the business's brand, its intentions, its desires, and how it wants to express itself to the world. The supply chain is the apparatus in which you are able to bring all those resources that are necessary to execute on that strategy. If it's flour, if you're a baker, if it's sugar, if you're a baker, if it's eggs, if you're a baker. And then administratively, it's all the things in the back office, finance, human resources, accounting, things that are necessary to keep the other three and the entire system moving as well. And then the last box at the bottom is the production system, where if you're a service, what are those things that you need to deliver that service to the business? What are those, if it's a manufacturing system, do I have the production line that can, in the receiving department and the outbound departments in order so I can bring in those raw materials, make the item, and get it off to the marketplace. So that's how we should look at all our business entities that we're servicing, either as a professional consultant to the business, and then also as the business owner, because this allows everyone to be on the same page because they're looking at the business from the same perspective. So once you get those four basic fundamental foundational issues of a business put together, we got to look at what entity choices are out there. And this screen is important because of all the 4 categories here, I would say there's 3 categories with 4 different possibilities. One does not have orange around it, and those are proprietors. There's no orange around the proprietors because sole proprietors, they don't have the protection of the orange, I like to say, because they're sole proprietors and they choose to do business as sole proprietors, taking on a little bit more risk than the other 3 entities. Because a sole proprietor is the default position or classification of an unorganized business. And an unorganized business is a business that doesn't go through the proper channels that relationship managers across all these service groups can probably help with, is the fact that small businesses need to have some kind of protection from liability. And you get that from becoming an entity, either an LLC, an S Corp, or a Corp or a C Corp. A limited liability corporation is usually the choice for partnerships, or say real estate investments, or businesses that are pretty much closely held in like a small group of maybe 1 to 4 people. Maybe those are partners, and they might choose an LLC structure. There's also S corps, where that's one of the 2 major types of corporations. Unlike LLCs, corporations are usually perpetual businesses. At times, LLCs, if one of the partners passes away or leaves the partnership, the entire partnership would need to be dissolved and something would have to be recreated to substitute for that. But corporations are different. These are entities that live on in perpetuity. And if something happens to a key owner, the business will keep going. But the distinction is S corps are generally limited to the amount of total owners they can have. Sometimes they're geographically limited, but these are small businesses that are big enough to be taxed, to get the protections of a corporate of limited liability, but they'll be taxed still at the individual level. C corporations are for bigger corporations who are probably advancing themselves at a higher clip or are taking on more professionalized investors. So they will need to take on C corporation status to advance their projects and interests there. Once we get the entities organized and designed to take on the strategy of the business, and we make a good choice on what kind of structure the business needs to, or entity type that the business needs to be incorporated as, we need to start planning the finances or the capital behind that project. And I use this, a lot of businesses, I think, don't take advantage of one of the best tools of collaboration, which is the joint venture, which can be used for strategic purposes as a source of cheap financing at times. It's because you're pooling your resources. It's kind of like if a bunch of companies got together and had a cooperative buying program. They might be competitors with one another, but they at least get together to buy as a group. So if I get 10 companies that do relatively the same thing and they're all buying the same widgets, if I go as by myself to buy those widgets, it's going to be a higher price than if I team up with 100 others that need the same widgets and we'll buy as a group. And that's just one example of collaborative work. But ironically, when I shared an example of a March 22nd news story in this, where 2 auto companies got together and announced a joint venture. Ironically, and they're both were 2 companies that started with a V and an R. This morning, I read the Wall Street Journal, and Volkswagen and Rivian have partnered to do kind of the same thing. And Rivian's an Illinois-based company. Well, their manufacturing facilities based here in Bloomington. But they decided to partner with Volkswagen to do similar to what's in there, and that's to launch a joint venture designed on technology to help electric cars in the future. So if you read the Wall Street Journal today, that is in there. So I'm going to go to an example of how some of these first few techniques can come together. And I have this example of VRJV LLC, which is company V and company R entering into a partnership agreement for a strategic purpose. And each of the companies are going to commit $300 each to this partnership and be 50-50 partners over the next 3 years. And in this example, it's something I guess is popular in the market now. They're going to create a software or IT system for cars. So if these two companies are coming together and they're going to create this joint venture, and we refer back to what an organization is and those 4 basic prongs, the two companies are going to get together and say, these are the things we need to do from a marketing perspective. And V company and R company are going to contribute certain expertise to the marketing function of the joint venture. Similarly, the supply chain in which the V company and R company are going to need to launch their business need to be identified. So in this example, V company is going to contribute an idle plant that they have that's been idle and shut down and not being productive. And the R company will contribute its massive purchasing and inventory system that has like worldwide reach with all kinds of great vendors that they can choose from to make their joint venture project work. Administratively, they don't want to, take on or move employees from their main businesses, so they can go out in the market and say, we're going to just take all third-party contracts for the accounting and HR, legal, and IT needs to run the joint venture. And then from a production perspective, they're going to collaborate and actually design, this hypothetical VRX automotive chip. Because I think earlier in the year, it was a big thing about cars were expensive during the pandemic because public transportation had fallen. People didn't want to be close to each other. So the demand for used cars went haywire. The demand for new cars went haywire. And then when the world, shut down from the pandemic, there were not chips being made. So the demand for chips was very high, the supply very little, and the market reacted accordingly. So in this hypothetical partnership, you got, the V company decided they're going to just give cash, for example, to finance their portion of the partnership. But cash has, when the capital budgeting process kicks in from business owners, they always have to be aware that capital costs money, even if you're going into the piggy bank of the business to get it, because you're foregoing other places that the money can be earned, that can earn a return. Money, there's no such thing really as free money. I no pun intended, but there's no free money. So money has a cost to it. Our company might go to their bank and say, we need $300 and we want to borrow it from the bank because we're credit worthy. We don't want to use the money on our balance sheet. So the bank will say, we'll give you $300 at a 10% cost. So V company, even though they're using cash on their balance sheet, they're foregoing that 10% it could be earning somewhere else. So they have to account for that. So, in this partnership agreement, if these two companies are coming together to launch this VRX product, they might say early on, we're going to sell this partnership or the benefits that this partnership creates in 3 years. We'll split the profits or whatever values created, and you can take it to your share to V company, and I'll take my share to our company. But we work together for 3 years at minimum, and we pull this off. Or they can say, well, it's just such a successful thing, we're going to just keep on chucking along, and we'll reassess sometime down the road and how we want to deal with our partnership here. But on the right side, it goes back to the CFO, the business owner has to systematically monitor what the strategic alternatives are that are available to their business, to their company, because the business owner is constantly you know, if I'm going to make change, am I going to grow my business? Do I build the expertise or the new product line from scratch internally, or do I buy that competence or that new product by acquiring the business or seeking a joint venture or some other strategic alternative? On the other side of that, sometimes the business gets to a point where it's mature. The business owner can get worn out, they get burnout, it's things like that. So they've built this expertise. So they might say, let's sell our expertise and let's take the wealth we created and make sure my family's taken care of, or my community's taken care of, or something that's near and dear to them is taken care of. Or in the JV scenario, you're trading expertise. It's like, I'm good at this, you're good at that. I'll trade you my expertise for a little bit of your expertise, and we'll come together and figure that out. Another major decision that business owners are constantly facing across every size of business: do we rent or buy? It's the lease versus purchase decision. Do we rent the new equipment and pay a note on the equipment, or do we pay cash for the equipment and depreciate the equipment over a certain time? Which one of these decisions is better for us? And then they also have to invest in their future with respect to R&D, research and development, and modernization opportunities. So the capital budgeting and planning process is super, super important because, again, cost of money and understanding, how long it's going to take to see a return on these investments are two other elements of the capital budgeting and planning process that all businesses have to realize. For example, the economics of the simple JV example, if I have both collectively, both companies have committed $600 and they each have a 10% cost of capital. So just simple interest over 3 years is $180 of money cost that they have to recoup or make sure they're investing in projects and opportunities that are going to yield a much higher return than the 10% in which their costs are. Because if you are investing that money that costs 10% in a project that's only yielding a 8% return, technically that's not a positive project for the business. And then if you take that same 10% on a compounded basis, it's $198 of money cost over a 3-year period. So be that as it may, if I put $600 in a business, I'm already seeing that this investment needs to generate over $200 in return over a 3-year period for it to be a project that's meaningful and strategically good for the business. So I like to always say that early on in smaller businesses, always being astute enough to figure out what's the hurdle rate for these decisions that I need to make, and then what's the payback period, because a dollar today is worth more than a dollar tomorrow. So you want to, the faster, if I know I can, in year one, I'm going to make $200, and then in year two, I'm going to make another $200, and I'll make another $200 year three, that's a positive project because I'm making more than the cost of the funds. So let's talk now about upgrades and change management and things that are necessary for business owners to realize, because changing a business, the way it operates and functions, costs money also. And when the CFO is narrowing down a list of alternatives, it goes back to those 4 points I made earlier. They're going to be making this decision usually in expertise and competence, and where we need to buy or sell it, or we're going to rent or buy a particular asset, or we need to make a modernization. So I'm sorry, got a little scared. So the company's change management issues are, you know, are more qualitative in nature. They're more, I would say, touchy-feely. They don't necessarily have the hardcore math and science behind it. But you always got to be abreast. Like, if I make this change in the business, are my employees going to be comfortable? Is it going to hurt my retention rate with employees? So, how will my rank and file employees feel about a VR or a particular venture, like in this example, or whatever decision you're making? Because if you're, for example, in the auto industry, you have all these partnerships showing up in like the tech side of the auto industry. A lot of this is driven because of unions, uh, the training. And it's also like tech employees don't work in the same type of environment as line manufacturers, and they don't have the same wants, needs, and desires. Someone wants an 8-hour shift versus someone wants to be able to work 24/7 anytime they need to. And I need a ping pong table in the corner so I can be more creative. Those are not the same cultural dynamics, even though they're in the same industry trying to do something in the auto business. But the where that is delivered is different. So you got to be aware of that. Uh, if you're a large conglomerate and you're a mature business, you don't move fast and quick like a startup. So you guys say that's a different cultural scenario. And management, sometimes you hear businesses are looking for management that has no experience because they're trying to do something different. And then there's other businesses where I definitely need uh 20, 30 years of experience. So it's nuances to this, I guess, to a certain degree. But again, everything that we're talking about culminates in the fact that we're trying to make sure that the businesses are becoming more valuable than they were the day before and or over a certain period of time. I sometimes tell business owners, businesses are like, a lot of people tell me about renovating a house. I'll buy the house that's, hasn't been remodeled, hasn't been fixed up, it's dilapidated a little bit, but it's in the best neighborhood. So I'll buy that house, I'm gonna put some money in it, and then I'm gonna sell it to the marketplace. That sounds like you're rehabbing a house is no different than turning around a struggling business if you can come in and make those adjustments. So it's all about, can I can I buy the house at a price where once I make the improvements and I sell it, there'll be a profit there. So that's a valuation exercise. So I think it's always important to make sure small businesses through mature businesses are constantly aware of what is necessary to properly value a business. So there's standards to the valuation process. There's techniques that owners should know, and for example, replacement costs, just for like if you got an insurance policy in your business and the insurance company says, well, how much is your business worth if something was to go disaster? We need to replace your business, all the materials, everything that's inside it. And then cash is king. Cash is always king. And the reason how you get to that valuation is based on those benchmarks that are established back when you do your competitive analysis. Because airline companies, how much revenue per available seat mile is United, Southwest, everywhere. That's why if Southwest can charge more for bags than, or doesn't charge for bags, but American does, they have to make sure they're picking up that revenue somewhere else by either cost savings or else. But all the airlines use revenue per available seat mile to performance test themselves against one another. And certain situations that merit a certified valuation, one that's very popular, any small business loan underwritten by the SBA that's over $250,000 in principal value of the new loan or credit, and they do loans up into the millions of dollars. They require from the bank to get an appraisal of the business, just like the bank requires an appraisal of a house when it comes to getting a mortgage. So it's making sure everyone's fully aware. How are these, and then essentially, even if you're getting a loan, you're going through the same process of always being prepared to buy or sell. Similarly, like a house. So there's other ways. These are some of the standards in which you can use to value business. Fair market value, which is based on the notion that a buyer and a seller are coming together, shared knowledge, shared, no one's being under any compulsion to do a transaction. Everyone's well informed of all the conditions. So these are two people getting together, hammering out a price for a business. Other standards are liquidation value. That applies to businesses that are going through distress. I mean, we've seen some businesses recently, like Bed Bath and Beyond has gone bankrupt. I didn't know recently a local business, Oberweis, just is sold its intellectual property for $22 million, believe it or not, because it was in bankruptcy. Fair value, strategic value, those are all standards of value in which we try to come up with to measure the value of business. Valuation approaches, from a balance sheet perspective, how much all the assets on the left side of your balance sheet, and that's a baseline starting point for getting a valuation. And then on the P&L, you're looking at, some multiple of earnings, some multiple of sales. Those are economic stream of economic activity that flow through the income statement of the business, where you can say, okay, if I'm a consulting business, consulting businesses usually sell for 1 times their annual sales. So if I'm a consultant and I've shown a track record of bringing in $1 million every year, I can probably sell my consulting practice for $1 million, in theory, that is. And then there's market-based measures as well, such as I think there's sometimes you can look at, like, if you were comparing Target, Walmart, and Costco, it'd be like, okay, your businesses are worth X amount of money. How many stores do you have? So I'll be like, so in theory, if Target's worth $1 billion and they have 1,000 stores, you do the math, each store is worth theoretically a proportion of that $1 billion. So there's ways to get market-based metrics that can indicate what your business could be worth. And again, looking at this, there's 3 different approaches: an asset approach, an income approach, and a market approach. Each has a different type of focus, but when you look at the balance sheet, the cash flow of the business, and the peers that you compete against, there's metrics out there that you can evaluate management, and because you're basically evaluating how successful or how good the management is in running the business. And we're getting to the end here, and I want to make sure we move fast enough to close out and have questions at this time. But every decision a business owner makes is going to create or destroy value for the business. There's very few opportunities out there where I've seen where you make a decision and it comes back and it's just maintains the status quo of your business. That would be a loss to some degree, because you wasted time just to break even or not to advance your business, because that's what we're trying to do. But, we're trying to recover wealth, preserve wealth, or unlock wealth in this process. And we're trying to make sure we're doing better for the county, we're doing better for our families, we're doing better for ourselves in so many forms of fashion and ways. And at this point, I will be open to take any questions that anyone may have in any of this material I've quickly gone through. And I'm always available. I can be reached personally directly at stanley.jackson@jackson-melton.com. I can be reached at toll free at 833-829-7782. And I'm ready whenever you are, if there's any questions.
Thank you, Stanley. Can you enlarge that for us, for if there's anyone that would like to get your information? It can just sit there for any questions and answers we may have.
Is that
Great presentation, a lot of great information. We thank you so much. Do we have any questions in the chat, Mercedes?
I do not see any questions in the chat currently. I think that just means you did a great job, Stanley. I do have a question. I'll open it up for yourself, Stanley, and then also Maricela. If anyone had questions about like continuing education resources, particularly on this kind of subject matter, what would you recommend?
You mean a source like a book or
A book, a person, even, or like an organization,
the person and organization is either myself or
right?
Southland Development Authority. I would say no. That's a good question. I honestly, this is gonna sound either dry, but I encourage everyone to constantly read or choose a business periodical or publication that they will read on almost a religious basis. If it's the Wall Street Journal every day, like I said, I literally woke up this morning, read my Wall Street Journal app, and I'm like, Volkswagen and Rivian are doing a joint venture, and I got to do a presentation on VNR and the auto industry. So it's like I'm just a big fan of constantly reading. It Think and Grow Rich if has always been a good one. I'm a big fan. I don't know. I don't think I'm answering your question, but I think I'm always big about just staying well read about business.
I think that was a perfect answer. Yeah, definitely. And we do have one question. Looks
I
like
s-
that
how
just
can
came in.
Are we reading the same question? How can
Oh,
we help
just
home
do.
daycares? We lack management.
Yes, that's
Oh,
the first one that we just had come in.
that's okay. Well, I'm a nerd, so I listen to NPR. Yesterday, I was in my car. NPR, Arizona is a leading state in this. They recognize that the non-licensed daycare or caregivers as a whole, if it's for children or for adults, they provide they are providing funding and resources in the state of Arizona. And again, this is how I stay abreast of things, so I can answer that question from that perspective. I would direct the whoever the person who presented the question to maybe go online and look at what is going on in Arizona, and because again they make a big commitment in Arizona for non-traditional caregivers, and they have resources there. I don't know if you can go into Arizona's like I said, you can Google it. I'm pretty sure it's pretty popular thing on the agenda in the state of Arizona right now. That's the best I can do is direct you there, and maybe some of the things that you come across in Arizona will trigger something that you can tap out to and reach out to locally.
Perfect. We have one more question that came through. It says, what types of professional services do you recommend a one owner company outsource to get a business up and running?
I would say the nu- the business owner is definitely going to take on the marketing responsibility. They're going to probably find those suppliers or key vendors. I think the administrative box is where you're going to look at for your first place to outsource. That's going to probably be an IT or accounting, or it's probably going to be some kind of accounting. There's for example, Intuit has a online platform that for QuickBooks that would fall into the administrative back office support area. Uh, and I think that would be the leading one. Same thing with IT. And then a good lawyer, if you or source for lawyers, definitely something to outsource, someone that can help you set up an entity properly. Those are partners, I would say. But as far as someone or a CRM, a customer relationship management system, even in my practice here, I'm trying to implement that so they can ease and streamline some of the things that business owners get bogged down to do. You look like business owners are very scarce on time, but if you got to sit down and do payroll manually, I would definitely tell you to go find ADP or someone like that that can give you your time back. It's money of the administrative functions in the back office. You fire yourself from those things as quickly as you possibly can, so you can have more time to get out and develop business and manage your business versus working in your business. So I hope it would definitely be those administrative functions that are killers of your time. Those are the places I would focus immediately as fast as possible, so you can keep your time and energy in more productive places in your business.
Perfect. That was a great answer to that question, and that kind of sums up all the questions that we had.
Mercedes, I wanted to see if Maricela also had an answer to the question as a relationship manager for SDA.
Yeah, of course. I definitely second everything Stanley said. What we try to do is conduct like a needs analysis when we meet with our business owners, just to identify where they are and where they need to be. So, like in outsourcing something like that, like we do definitely recommend like the accounting and bookkeeping, the CRM systems. We also use those, and they're very useful when it comes to like gathering the data information, and also helps us like do informed decisions when it comes to that. So marketing and branding is also something that we sometimes like recommend to outsource if you have the budget for it. So those are all like top level kind of things that we see normally. And I know Mercedes had asked about like how we can go about having additional resources. So like connecting with the Southland Development Authority and giving us more information on your business is a good connection, because again, not only do we develop those special programs, cohorts, business education programs as well, we do connect business clients to one-on-one expert consulting. So that gives us like a leverage to make sure that we're focused in and tailoring those needs depending on what it is that you need based on industry, business size, and everything else that goes into it. So thank you, Dominique, for the opportunity to answer.
Was great. And thank both of you for those answers. I'll just add to that, from being a small business owner in my past. Other things that I think you can jump into is probably a virtual assistant, who can definitely assist with administrative work. I do know the big thing with starting a business on your own as a solopreneur is the paperwork. Getting someone to streamline that and get that off your back will definitely assist you with moving forward. With the marketing, I always tell people that, family always asking me questions. Teenagers, you don't have a budget for someone to do your marketing. These teenagers know how to swoop through all these social media platforms better than all of us. Fine, if you don't have a child, ask one of your cousins, a family friend, get them on. You can maybe give them a few little dollars, a week or a month, and they will be so excited, and they can get all your platforms set up for you. And also ask them to train you, so you can transition and start doing it yourself, until you can scale up. But I do know that that's helped a lot of people. I have my daughter outsourcing some of my family members and friends. She's 15, and they're honestly great at it. So, and then I'll say, Stanley, you stated with the attorney. Yes, contracts. We never talk about contracts. As a small business owner, when you're working with people, you do need contracts. So also have a plug for a contract attorney in your back pocket, so they can help you set those up, so that you can make sure that you're legal with all the work that you're doing and covering yourself and your business asset. And then Stanley, I have one quick question for you, and then we're going to jump off. I know this question comes across a lot. You talked about the LLC, the C Corp, and the S Corp. I know small business owners like to know, as a solopreneur, which one would you recommend they start with?
It's funny you would ask me that. That is, it depends. I hate to say it as a lawyer. It
Always the
depends.
answer. I'm asking that too, because everyone comes and asks that question, and we know social media is like, get an LLC and you can make $1 million.
I will say this right now, on the social media front. Now, I did exactly what you said. I found a young gentleman, college kid, who was, these college. I did not grow up. I got out of college without an email address. I'm just, not to date myself, but and then again, so you're right, spot on right. Because Jackson Melton X on all social media platforms is how you can reach us now, because of this young kid. I'm just learning. Your question, your comment reminded me that he's like, you got to tell people you can reach you at Jackson Melton X across all social now. So I did that finally. But back to the LLC question. I'll be honest with you. I hate the social media says get an LLC and get rich, because that is bad advice. It really does depend on the business that you're in, and then the amount of owners and what your goals are. An LLC is better than nothing, but it's not always the best thing either. Again, it depends on the facts and circumstances of the situation. Not to sound like a generic lawyer, but it really does, though. It depends. There's only one type of business that I know is almost all the time great to be an LLC, and that's any kind of real estate transaction or real estate ownership. Those usually do well in a by default in an LLC. In other words, you can't go wrong. But I also tell people all the time, it's only on a rare occasion that you open up the Wall Street Journal and you look for, the publicly traded. There are no LLCs are not in the Wall Street Journal. Those are corporations. So if you're in a business trying to grow and get big, and your goal is to dominate something, you might as well start off from day one as a corporation. Again, LLCs are not listed in the Wall Street Journal. So again, it always goes back to what it is you're doing, what your goals are. And you talk about a contract attorney, you just need a good business attorney, that can give you good advice on the nuts and bolts, belt and suspender issues of the business. And those things do fall into entity choice, some low-level tax issues, and risk management, because those are the three things. Like, you want to be good and compliant with the IRS and your local tax authorities. You want to be good with the perspective of you're not putting your personal assets at risk or like that. So as long as you pick some entity outside of proprietorships after a certain point of because if you slip and fall in your mom and pop corner store and it's a proprietorship of some kind, you've exposed your personal assets to risk. And so if that grocery store or corner store is a LLC and someone slips in there, you limit the liability to the business, and then your insurance for the business will probably pick up the claim, and you can keep going in business. It's not something that's going to be a detrimental event. And things happen. So again, I hate to say it, but it depends. It depends on some factors. But there's plenty of resources at the SDA. There's plenty of resources, I'm sure, across the county. But if we as business advisors are just able to listen to, what's going on the street, and we just guide people in the right way accordingly.
Sounds good. Thank you so much, Stanley. And then that just goes back to the use of having a relationship manager with the SDA to help you decide which type of business entity is best used for the type of business you are trying to start. So it all comes back around full circle. But we are going to end. We are a little over time. We thank you both, Maricela and Stanley, for joining us on today's Wednesday webinar. If you would like to join the source again, you can meet us here on the last Wednesday of every month. We are scheduled out. So we are meeting again this July. It will be with tourism. We will be talking about how you can set up your business within the tourism entity, what channels you should be looking into to tap into so that you can also link up and get your business out there at some of these events. So join us, or if you know anyone, if it's not you, let them know. You can find us on our website, on our events page, so you can register, or through our email e-blast. Okay. Thank you all again for joining us. We're going to end now, and we will be sending all those who registered all of the materials that you see here in this meeting. Thank you all. Have a good one.
Thank you.
Bye.